All right, so welcome into the live stream today. We're going a little bit early with some news out on crypto.com, some changes with crypto.com, and also just some overview of how this exchange has kind of navigated this pressure cooker of times around the crypto markets. We're going to dive into all that deep. My name is Paul Barron. Welcome back into TechPath. As you guys know, we've been covering a ton of changes within the industry, both from an aspect of safety and security nets, looking at exchanges that have obviously had some troubles. We've seen a variety of meltdowns within the industry. As you guys all know, the Celsius saga, the scenario that we're dealing now with Three Arrows Capital and Voyager, the potential of what's happening over at BlockFi with FTX and the acquisition. There's just so much happening. The next person, I guess, or company to take a look at is crypto.com. And mainly this was brought about through an email that our entire crypto pit, because we use crypto.com, received today. And we'll break down that email. There are pretty big changes, I believe, at least in the overall limits, both on withdrawal and transaction limits that are being placed on crypto.com. So let's kind of break it down. There is a little bit of release of information out there on Twitter. This is a tweet breaking. Crypto.com limiting withdrawals to 3,000 daily, 3 times lower than Voyager. That's if, and I'll kind of explain this when I put this up on showing you just the email that they sent us. So it is a $3,000 per day on a maximum of 5 transactions, which is a maximum of up to 30 transactions per month, or 30 grand. That's if you're not holding a Crypto.com Visa card, which is their debit card for the program. I want to run through what has happened around Crypto.com for the last few months. And let's just kind of take a look. So first, we saw the slump. 30% of the staking rewards were slashed. That occurred, which is really kind of when we started to see a lot of migration in reality over to Voyager and also Gemini, because of the scenario where Crypto.com basically pulled all of the yields right off of the primary stablecoins, which USDC was one of the big ones. I was participating in that. Sure, they had the Earn program, which was where you lock up things 30, 60, 90 days, but all of that got slashed and essentially has gone away. So that in itself was one of the bigger scenarios. This happened in May of this year. And I think this also caused a little bit of a slump within the Crow token itself. That being said, then you, of course, had Crypto.com just this last week removing Dogecoin, Shiba, and others from the Earn program. So that's now off the table. They did add Zilliqa, Near, and Phantom. Now, I'm kind of curious on whether or not you guys would use Zilliqa, Near is a great one, or Phantom, and use that. I'm still not sold on Phantom on that token, but would you use those in the Earn platform on Crypto.com if you guys are using Crypto.com? And were you using Shiba and or Doge and really kind of got that pulled out from under you? I'm kind of curious. Just hit the comments below, or you can drop some stuff over in on the sidebar for the chat. We'll try to get to some questions today. Make sure and like the video, because do you like us going live earlier in the day? Love to know that. Hit the like button. Make sure and like and subscribe, of course, if you're not subscribed in on the channel. Maybe you're new to crypto and you're thinking, gosh, where is the best exchanges? We're going to continue to do a rundown. I'm most likely going to do a breakdown on the state of exchanges here in the next week to 2 weeks, mainly because I feel like there's so many big implications that are occurring right now. If you look at what's happening with FTX, Gemini, Coinbase, obviously Crypto.com, Kraken, KuCoin, and the likes. The question is, there could be some turmoil in some of these in the very near future. So big stuff to be following for sure. Additionally, Crypto.com did receive approval in principle to offer services in Singapore. Now, the reason I look at this is I wonder, you're targeting Singapore as a market. Does that indicate that maybe we could see less interest from U.S. markets for some reason? Or is it just a scenario that they're trying to continue to expand the marketplace? I just don't, I get that there are things that outside the U.S. that you can do as an exchange that you can't do within the U.S. obviously with the banking license requirements and many of the regulations requirements just to be able to operate in the U.S. So this is I guess this is good news for them around this in terms of what it looks like, at least in Singapore. The other thing that kind of stunned me a little bit was them parting ways with their NFT head. And this was, of course, following layoffs that we'd already announced the last couple of weeks ago. The fact that, NFTs, I still believe, are going to be a huge part of the future of how crypto is done. Granted, NFTs have absolutely become hammered along with games, metaverse in general. It is getting hammered, but so are just about every other altcoin. You look at obviously Bitcoin and ETH. We've seen some crazy volatility in Bitcoin just over the past 24 hours. The fact, though, that these exchanges are not looking forward in reference to where NFTs and how this strategy is going to go around smart contracts, non-fungibles, I think is a little bit of a knock on anyone that is not looking at acquiring people. I was just reading something where you've got Kraken. They've had a kind of a shift in how they're approaching their employment. KuCoin, though, on the other hand, has been kind of in the positive side where if you look at some of the job offerings and listings, KuCoin has actually ramped up their job listings overall. So that is pretty significant as well. So John Conyers helped Exchange get its first NFT token platform off the ground when he joined Crypto.com. This was just Crypto.com in March of 2021. And then he obviously is now out. So again, big loss, I think, for them. Maybe they have something in the wings in terms of, continuing to build the executive suite there, because I think this is going to be a very key area in the next layer. Because think about this for a minute. We are going in, obviously we've been through some very troubled times. We're going into maybe some continued troubled times on the latter half of this downturn. Because I feel like, even Michael Burry mentioned this today. Michael Burry, the big short guy, has really hit a lot of the traditional market numbers and predictions right on. And his statement was that he feels that we're about 50% of the way through this. So there's a lot of liquidations and a lot of scenarios that could play out as we start to see this go through maybe Q3, early Q4. But I feel like companies that are investing in talent right now, being able to grow their roster of really key talent and building during this period of time are the ones that will not only survive, but absolutely kill it on the other side. So this is a critical time for a lot of these exchanges. So when you guys are out there thinking about where you should go with these things, if you're not doing self-custody, by the way, I always recommend that first and foremost, you need to follow what's happening in the exchanges from an executive standpoint, much like you do with a publicly traded company. The difference is they have to, of course, talk about that. If you're invested in Apple or Microsoft or any of that, any kind of major executive moves, all that kind of stuff is always revealed. With private companies, it's quite a bit different. So you really got to pay attention, watch the job boards, watch our channel. We try to keep up to those things as much as we can. And then we do a ton of interviews too from people that are actually leading these areas in the market. So just keep an eye on that. Revised changes also to their Visa card update. This was in the 1st of June. And essentially it kind of just pulled it down to somewhat of a very basic level debit card. It just, the overall offering here, other than the fact that, with the card itself is designed to give you CRO, or you have to, of course, have a certain amount of CRO for a certain level of debit card, and then you get rewards and things of that nature. And this is the thing that I think started playing into their decision to go in this direction with reducing limits based on non-card holders, and also based on the card holder levels. And we'll break down all of that here in a second. So that, I thought, on June 1st, this was kind of the overall scenario. Ruby Steel, they had the CRO rewards cap now on Ruby Steel. It was 25 and 50 on Royal Indigo Jade, which is most of the people that are entering into this area. We're kind of going in on these lower levels, the $400 level of CRO versus like the $4,000 level of CRO. Further into this was this topic right here. This, of course, is over on their website, and that was that they had gone into address whitelisting. And this was probably the biggest concern for me, at least with crypto.com, is doing whitelisting with a 24-hour hold on wallets. So if you guys are out there, I'm sure you've already faced this. If you're trying to move crypto, you have to whitelist a wallet. That wallet takes 24 hours in a cycle, at which time you can then move crypto. And that includes any kind of whitelist, including USDC or other tokens. So that is a big factor in essence, because if you don't have those whitelisted, and then you have to have them obviously whitelisted to the place that you're sending them to. So you have to make the decisions up front. And then you have to kind of be prepared in case you're wanting to move things around. You kind of have to know what destinations, what wallets, whether you're going to ledgers, things of that nature. You have to have all that planned out and get those whitelists built up around all of your tokens, just so you have the flexibility, because it used to not be that way, where it was instantaneous. That was the beauty of crypto. And we're finding less and less of those kind of scenarios as we see more and more restrictions coming in from the primary and the major exchanges out there in the marketplace. So here is the increased limits for fiat wallets. This, of course, was January the 11th, and these were increased all on fiat wallet deposits. So you had a lot of flexibility. I mean, if you think about what ACH push you could do, what you could do with a wire, pulling an ACH, doing a SWIFT transfer if you wanted to go into that kind of level. Most of this stuff was really more around just ACHs, in my opinion, which was really good. I mean, 100K, so daily limit, or up to 5 times. So you could do 20 times from maybe different bank accounts, things of that nature. All that plays into this. And this is where it gets a little bit weird, because this, as I watch not only the method and the moves that many companies are making. Remember, when you've been in, I've been in business for 2.5 decades, run media companies, tech companies, just outlets all over the industries, and strategy and planning is very key. And anytime you're making big, major steps that affect your customer base, the number one thing that a customer base needs more so than anything is warning, especially when you're changing something that's very significant. And that's what really kind of caught me by surprise when I got the email this morning from crypto.com. And I'm just surprised that nobody's really kind of breaking this down, because it just is, to me, is a little bit of an alarm bell. I'm not saying that this is a bad thing. In essence, sure, there's structures, but why do this now? Why make these kind of modifications as we go into this? And I want to show you the email here in a second. One thing to also remember, and this has kind of surprised us, if you really are looking at the DeFi wallet on crypto.com and you want to look further into where those private keys are, because it's very difficult to find, first of all, getting into the private keys. Guess who holds the private keys on this, on crypto.com? This is, of course, held by Ledger. So you've got your private keys, in essence, of the DeFi wallet that are held in cold storage via Ledger onto this under the Vault product, which is a great product, for anybody that's institutional, or you guys that are in the whales that I know you guys watch us out there. There's some big stuff out there. So this surprised me as well. So this is very interesting. Good. This is a good thing because I think that is even more so secure. So that I like. And I do think that as you continue to dive into these things, I think that these exchanges should all be much more transparent in all these benefits that are out there for what they're trying to do. Because when, things that you have to change in the overall setup or deposit requirements or limits, all these kind of things that really are being looked at and scrutinized very closely right now, the more transparency you have, the better. And I just would say, guys, that is the number one thing you have to do when you get into this. I want to jump over to the email that they sent, and let me kind of blow this up for you guys a little bit. All right, so essentially this came in. If you're a crypto.com user, you probably got this email this morning, 7:04 a.m. to us. And here's the states that obviously, so this mostly US issues. And these are the states that are all affected. So the change will become effective today on July 1st, and that no action is required. So this is basically a terms and condition change that they have the right to do and can do at any time, and that's normal. Every bank has this, every exchange has this out there. They can change the rules every day if they wanted to. Separately, they also have updated the fiat wallet and terms and conditions to modify the transfer limits for instant ACHs. And this is bank to USD wallet transfers. So when you're moving money to your bank and being able to do instant trades or instant ACHs, so you can do a trade real quick. So that's going to be modified. That, though, is claimed to be effective a little later in the month. But here is what concerned me right here, is these breakdowns. So not many people are in the Obsidian or the Icy White level, but you can kind of see the monthly limits. This is basically whale territory. You have to be owning a large amount of Crow to be able to be in the Icy White level. The Jade Green comes into the next, and you have the Ruby Steel, which I think is the $400 level. And then you go all the way down to no crypto.com. So let's say you're not buying Crow on any of these and you don't have the Visa card. Right now, you're up to a maximum of 30 transactions per month, $30,000 a month. But the big one is the minimum or max of 5 transactions per day, or $3,000. And what I gather from this includes transfers out. So that would limit your withdrawals of $3,000. Now, if I'm wrong on this, we would love to have someone from crypto.com come on our show and break this down. First of all, why this is being implemented. What is the structure here? Is this to, one, secure more interest around the credit card itself or the debit cards themselves to help prop up Crow and keep the Crow value going? I'm open to really listening to how and why this strategy is going about, because I think this is something that really needs to be, one, transparent. And you guys, I think all exchanges should be, because that's, to me, that's the whole beauty of crypto, is that there is so much out there that you can learn on your own, get through information that is usually required. What I feel like is happening is it's kind of getting into this zone of where it's like the banks. You just don't know what's happening. And then you talk to a customer service person. I just ran into this today with a bank, I won't mention their name, that is now limiting any kind of external issues to crypto-related entities. So they themselves are starting to put stringent requirements on moving cash into crypto-related entities. And they didn't even notify us of those kind of things. And these are some big numbers that we're talking about. So that, to me, was really kind of just blew my mind, is that now we're seeing a lot of these kinds of habits and tactics that are now being used in some of these exchanges. You look here further, Midnight Blue, that's a Visa card holder. Now you got 5 transactions, $5,000 a day. Ruby Steel, that's, I think, the $400 level of Crow, only 5 transactions and $10,000 a day in transactions. And that goes up to $50K a day in transactions, and then $100K if you're at the very, very top level. This is pretty crazy, and for a whale, $500,000 is not a lot. So this is big, and if you look, please note that modified limits to instant ACH deposits will become effective on July 22nd. Though we've not really seen what those changes have applied to for instant ACH, so I don't know what that means just yet as to how instant ACH is going to work. We're gonna do more research on this to find out exactly, because it looks to me a little bit clunky of how they release this. First of all, on the day that the TNC gets changed, and boom, 7 o'clock in the morning, you get this, and it's just right in your face. So I think that in itself is a little bit startling, but also at the same time, I'm just wondering to what level is this going to go with crypto.com? What's going to happen next? What kind of scenarios are we going to be faced with here? I feel like there's a lot of turmoil within the organization, and I'm hoping that I'm wrong, because this is something that is, first of all, we're big fans of this platform, and I use it, have used it for many years, or for many months. I guess we started using it last year. When Matt Damon came on. You got to love that. So I think the key here is, where are you going to go? And that's the question that I think everybody's asking today is, as we get through this really tough time in the market right now, And I've said this before, there's only going to be a handful of people standing on the other side, much like what we saw in the past run. And if you even go all the way back to Mt. Gox, there was only a handful of projects, a handful of exchanges, a handful of programs that were successful in coming out of that. Even if you go look and see what happened with Bitfinex, I mean, there's so much there in history. Now we're seeing it in a modern era here among major exchanges that really kind of populate the land in crypto. I think it's getting very, in my opinion, you have to be much more cautious than ever before in doing self-custody, and I think that's the key. Self-custody during extreme market condition, these are the routes to take. So for all of our audience, I'm telling more and more people, you need to start really giving high consideration to utilizing self-custody, because it is the one that I think is the only way to really kind of zoom in on this. And if you look at some of people, right here, what they're talking, it's crucial to remember that crypto financial services providers, like what we saw with Celsius and Babel, CeFi platforms, are all opposed to DeFi applications. All of this based on evidence. Obviously, these are being regulated. We're going to see all sorts of new changes that are starting to apply. All of this could come into a very restrictive state, and any kind of those kind of things that happen during this pressure cooker that we're in right now, self-custody is going to be, I think, the number one thing you have to do. We'll jump into that, maybe some ideas on that. We'll also take a look at Crow, the sentiment as well. We do want to cut to a poll real quick and see what you guys are up to on this. All right, do you currently hold any assets? A lot of people are holding on crypto.com. Man, 900 people out there. Oof. And it's not bad. I don't know that this is a bad thing, but it is limiting, and that to me is always a concern when you start limiting people's flow of how they're transacting within blockchain, because this has always been the freedom of movement, and especially at the lower levels, because this only hurts the people who are not invested at the higher levels, which again gets back to my argument all the time, is that the more restrictions we see, the less opportunity we have for people to be able to make their own way in crypto down the road. And it puts a lot of restrictions on the potential mass adoption, because you don't see those big benefits that are greater than what you see in the banking industry. So lots of stuff happening around there. Make sure you guys hit like on the video if you like doing these live streams earlier in the day. This is rare that we do at 12:30. We are going to be doing our big portfolio reveal on our payment tokens, and we'll kind of explain that. But if you guys have not checked it out, I'll show you that on our YouTube before we get out of here. But I want to get into some questions today, and then I'll show you a little bit of the data on the overall Crow sentiment as well. But if you jump over to our channel and you just go to this right here, we're building a 20K portfolio. We're doing a series. We've done our 1 and 2. This is our third video coming in. So we're going to be doing that at 2:30 today. So make sure and don't miss that live stream. It's going to be huge. Let's jump over to Crow real quick. So where we are on Crow right now, and I'm running Market Cipher on this right now. Let me kind of zoom up on this to see what this is looking like. All right, so sentiment, this was yesterday at 62.03. We saw a little bit of a jump here. Amplification was at 59.21. So you guys, if you're new to our channel, we run a platform called the Crypto Power Index, which you can find just by going to paulbaronnetwork.com. And we measure two things. One is sentiment, overall sentiment in the market, and then an underlying measure to kind of counterbalance sentiment is a thing called amplification. Amplification is when people are referring to projects as saying, hey, you should get into this, or I'm invested in this, I'm really going to stay with it, I'm holding, those kind of statements. That's an amplification number. So, and what happens is we look at how that affects larger masses. Do people react to those things, like it, say I'm going to respond to it, engage with that content? That creates a score for amplification, and it usually is a leading indicator on where money starts to move. Overall amplification is looking kind of what's happened in the past. So we look at both those scores, and if you look back here at where Crow is right now, they had a little bit of a downturn, but it dropped almost, well, a point and a half, so almost 2 points, 60.48 and also 57.92 on amplification right now. So if I was betting on this based on our current data, most likely we are going to see a downward trend on from our current situation. Now, the question right there is whether or not this starts to see some impacts, and I'll talk a little bit about this today because I know Bitcoin obviously had a big move. For some of you guys that bought in the 19 and you're in our mastermind group, you got a chance to maybe make some money on that little move yesterday from 19 to mid 20s. Had a nice move, very odd move too. But the point is that these are the kind of times that you can do some kinds of these kind of swing trades. The other thing I'm concerned about over the weekend is the liquidity issue that we're dealing with in these 3-day weekends. Remember the last 3-day weekends we had a lot of volatility. You can't move money, from banks. It's not like, weekdays and those kind of things. There's a lot of limitations of being able to get cash and assets in to be able to play on a market quickly, including these instant ACHs, things of that nature, when you have these 3-day weekends for Bitcoin and Ethereum. So I'm anticipating some fireworks here for that, for sure. Let's get over to some questions and jump into this. All right, Brandon, maybe it's because they're trying to drive you to using their card. I think, sure, okay, using the debit card, but that's spending, so it's pulling dollars out, so liquidity has to occur. I think it's really more about Crow, is propping up Crow, the token, which is an underlying effort for the overall good of Crypto.com. Which exchange do you think might come out on top most against all the chaos and what's going on right now? I don't like picking winners, and I don't give you financial advice. I can tell you what I'm doing, and I will tell you that right now I use Gemini, I use FTX, and then I use a lot of the self-custody side of things. Occasionally I'll use Pionex they have a US banking license, so you can do things over there. They're good on bot trading. We probably should do a video on bot trading because it's a very interesting thing. There are some pitfalls to that from a tax standpoint because the transactions are just ridiculous. But right now I would say Gemini and FTX, I feel somewhat safe with those. Those are the ones I'm kind of looking at. I also like KuCoin, kind of like Kraken, but KuCoin is, depending on what you're trying to get to also, because there's a lot of times that you guys are buying tokens out there that it's hard to get to some of these tokens. So be thinking about that. If you're trying to buy Binance, I'd go to Pionex. If you're trying to buy, ERC or, Ethereum base, Gemini is pretty good. So a lot of that stuff there. Think about every Crow investor in the last 6 months, you invested thousands of dollars to get buybacks and then they take away the buybacks, then the token tanks 80%. Yeah. So that is a problem, my man. That is a problem. Imagine if Visa required whitelisting 24 hours before buying lunch at McDonald's. Yeah, right? I know. Can you move USD onto a ledger? USD, no. USDC, yes. USDT, yes. Any stable coin, sure. There are fees related to that, so just be aware that when you do if you're using stable coins on a ledger device, there are other ways around that. We probably should do a whole, educational series on that inside the Diamond Circle, which, by the way, you guys jump into the Diamond Circle. It's free email. We drop a few courses. We're going to probably start amping up our webinars over there on the free side. We also have the mastermind group that you can get to, which is, leveling up. Let's go here. Do we have a whitelist to move coins to a ledger? Yes, you have to whitelist your ledger wallet. Yes, you do. After you've been wrecked once or twice, you realize yield's not worth it. Cold storage, more research, better sleep. I like you, Matthew. You're thinking in my camp, my man. There are still ways to play into that yield market. You just have to do it in really safe zones and know that it's not long-term. You can't do those set it and forget it. You kind of rotate in and rotate out. There are fees on those, but, not a big deal. Crow's chart is perfectly healthy, especially during a global recession. Yeah, I think it's down. It is down but this continued scenario of them reducing and reducing and reducing just does not play out well. Kind of feels like we're being funneled to FTX. Yeah, it's an interesting thought, of what's happening out there. How can exchanges go broke with all the fees and liquidation profits? Listen, this is all about how liquidation works within the overall global markets. You look at the amount of liquidity that is poured out of crypto. Think about that. $1 trillion has moved out of the market, either through exiting or onto cold storage. Remember, we just talked about this the other day on the Bitcoin show. There has been more Bitcoin going to cold storage or self-custody than ever in the history of Bitcoin. So that in itself starts to create liquidity issues across all of the markets. Plus, you got to deal with scenarios facing issues around the challenges of USDT with Tether. Is Nexo safe? I'm not calling safe or not on anybody. What I'm saying is get in there and do the deep dive research. Follow what we're doing. We dive in research. We do a lot in these. Remember, these are market movers. So the cool thing here is we bring you a bunch of news. Hopefully we've done a lot of our own research and piled our team together to get you guys this. Not investment advice, but hopefully it just triggers you to a point of going out and say, I'm going to go take a look further. And if I like it, I stay with it. If I don't like what they're doing, I start minimizing my risk. That's good finance. That's good finance on anything, whether you're trading in traditional stocks and bonds, whether you're just going into investments, 401ks, IRAs, all those kind of things. You should be paying attention. This is your wealth. This is your future. You have to pay attention. Do not fall asleep at the wheel. Uphold, their partnership with La Quinto. I've used Uphold, for only a few things. But anyway, KuCoin I kind of like KuCoin right now. Binance is an awesome product. I don't think they're going anywhere, but Binance US is, let's just say, guys, there's just not a lot there. It's kind of a ghost town for tokens unless you're just buying Bitcoin and ETH, and there's so many other options, out there. There's a handful of others, don't get me wrong. If you do want to cash out from KuCoin, is it even safe to move to Coinbase or Gemini? Well, okay, first of all, if you're cashing out of one exchange, I would hope that you're going into self-custody. Or at least a larger portion of that into self-custody. Sure, you need to be ready on an exchange, and I think that's a good thing. But remember, USDC or Tether, that's liquid stablecoin. You can move it quickly. It's in an exchange within minutes, so you don't miss a trade versus waiting on a bank to do a transfer. Those kind of things that all fly into it. Let's go to the poll real quick. Last few questions here. Okay, so we got all right, Binance 50%. Everybody's liking that one. FTX number 30, okay, and Gemini, and then Pinex. All right, which change do you trust the most right now? Wow, this has been a weird group. Coinbase and not even on that list. So crazy stuff. All right, a couple more questions, then we're going to get out of here. Don't forget our 2:30 live today. We're going to do the portfolio edition, which is a really good one. It's going to break down a lot of stuff around payments, so watching tokens in those ones. Are you still buying up Crow? No. They spent millions on a UFC marketing deal. Yeah, they did. Paul, you look worried. Exchanges are over. I'm not worried because I've been through these things before, guys. I have seen the fall of businesses, of my own businesses, of accounts. I've lost money. I've seen the deaths and the spirals. This is a walk in the park. Trust me. These are just conditions that, and plus I've lived through a couple of really hard recessions too. So. These don't worry me. This tells me that we have a great opportunity in front of us because this thing is going to absolutely go parabolic. Whether you're in traditional investments or you're in crypto, we are going to see a revolution and a renaissance in monetary systems in the next few years that are absolutely unmatched like anything we've ever seen before. You watch. It's going to happen. When you're watching this in a few years, you go, geez, this guy was already talking about it. Hey, listen. If you guys are not in, like I said, Diamond Circle, get into it. It's cheap, it's easy, and you're in a community. That's the number one thing. Stay in the communities during these times. This is the thing that helps everyone stay on track, keep your fortitude out there, and really kind of be trucking along to hopefully build your wealth in the future and dive into crypto even deeper. If you guys want to reach me, it's out on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.